The main markets in the past trading session had a wild swing in it. On X, it was reported that Donald Trump would be easing off on tariffs, and that later turned out to be fake news. In this video, we'll look at the main markets and also the crypto market to determine, is there clear skies ahead or are things getting stormy? Let's run the numbers. The fake news that President Trump was considering a 90-day tariff pause was sufficient to rally the markets. Instead of decreasing tariffs, President Trump threatened an additional 50% levy on China. We're seeing a bit of green inside the market, but it's good to just consider that this last 2-day drop in the S&P 500 was one of the steepest drops on record. And it was brought to you courtesy of the VIX, the fear index of the main markets. And looking at the fear and greed index from the major market, we can see it's still stuck on 4. It was on 4 yesterday as well. There is an incredible amount of panic inside main markets. Looking at high impact economic data releases, they're coming Australian time this Thursday, and they're going to be doozies. When we think about the CPI and tariffs, of course tariffs make everything more expensive. 2025 is undoubtedly the year of the trader, and if you're an investor, you definitely need to know how to trade. When we look at the FOMC projections, we're looking at the odds of a rate decrease and easing in interest rates of 23.9%. But that's actually down from 33.3% just one day ago. This is the probability of a rate cut. Price is always moving in a wave, and the crypto market has held up reasonably well. Bitcoin currently up 0.85%. Ethereum is down, Solana is up, ADA is up, Doge is down. XRP is down also. Just like the main markets, the crypto fear and greed index has been coming down over a considerable period of time. It's currently 19. Which is extreme fear territory. The central question now is, are the main markets going to recover, going to go for it, or is there more downside action afoot? Now what we can do is to look at cut unders and cut overs. Now here I'm looking at the S&P 500. For quite a period of time, the S&P 500 was under extreme duress. It's very important to keep your eye on the charts and understand how the reality of the charts is actually playing out. The news is one thing, it's a wonderful story and it will keep you awake at night, no doubt, either from a greed perspective or from a fear perspective. And yesterday's video was really important. It's all about fear. And inside the service, I give you targets on the S&P 500 if we do get a C19 sell-off and right across all of the cheat sheet. I also let you know what you need to look at in terms of recovery and in terms of breakdown. You'll have the upward paths, the neutral paths, and the downward paths, as well as the projections as to how bad things could get if we get an absolute market meltdown inside the service video. Continuing on with our analysis of the S&P 500, you can see here that we started to cut under this particular trend line around the 27th. Now what happened next? This is the reason that we look at price action, especially trend lines. When you start to have multiple breaks of a trend line, this is not necessarily strength, this is actually weakness, and we need to know where price can rebound from. Now what we've seen is a very up and down price action, but it realistically is something that we had in our crosshairs. Now we know this is occurring because the VIX is spiking like an absolute wild thing. A lot of people will look at the stock market and look at 1 or 2 charts and say that's it. We look across 32. This helps us to stack probabilities. Now one thing to note, and students from the profiting course already know this, when you get multiple CUs or cut unders, that means the potential for a cascading sell-off is on the cards. Now let's do exactly the same kind of analysis on Bitcoin. We can see it's under pressure. It's not only under pressure, it's continuing to get squashed down by the sellers. We're having multiple cut unders, and this is not a good thing because when you get too many cut unders, you get capitulation down to the negative side. Now, does this mean we just run around like chickens with their heads cut off and we worry? Absolutely not. You want to get in on the red, but you must have the knowledge of when to do so. Buy on red, sell on green is a philosophy that the CTKS Global family lives by. We've seen across time that gold has held up relatively well, but unfortunately things like high growth firms such as Tesla have been selling down. One thing that you really need to keep your eyes on are the futures of the major market indices. You can see we've had a kick up just recently. That's put a degree of positive confidence into the markets, but please beware, this is just no more than a technical bounce until proven otherwise. Volatility to the upside and to the downside is nothing to be concerned about. What you do when you trade is that you seek to time the market, time the bounces, and to go after reasonable percentages. A lot of people misunderstand how small percentage gains can create incredible percentages in terms of returns across a year. I'll give you a quick example. Say you had $100,000 to put into the market and you could just trade 100 times and get just a 1% return. That's $1,000 profit each time you did it. How many days would be required to double your investment? I look forward to seeing your comments. It's a really important question. You're not compounding that 1%, you're just getting only 1%. That is $1,000 each time you trade, and you do one trade per day on average. So how long would it take you to double your investment from 100 to 200 if you could make $1,000 per day, which is 1% on average? Price is simply moving between structural support and structural resistance levels. The key is to have the best, most statistically significant structural support and resistance levels you can get. Now let's throw on the indicator from inside the service. Every chart inside the service has its own indicator. Now what you can see is Bitcoin staged a rally. It found support at the 75,308 and it came up through structural resistance, and stopped out at the 80,058 level. It's trying to flip this 79,501 into structural support. It's not there yet. It's still under duress. It hasn't confirmed. If it can't confirm, it will come down to the next structural support at 78,410. If it can't hold 78,410, it will make its way down to 76,634. That's of course the negative side, but what if we actually flip this resistance into support at 79,501? We have to get through the $80,000 level, but if we do so, that puts into play positive structural attraction to the 81,866. Please let me know, are you bullish or bearish on Bitcoin in the next 24 hours? Unfortunately, investors are not taught how to stack probabilities. Everything is basically, the fundamentals look good, everything looks good, this chart that was produced a long time ago, that looks good, so therefore I'll buy at any price. Unfortunately, that's not always the best thing to do. As a trader, we look to stack probabilities, and when we look at US liquidity, we're not seeing any spikes up here at the current time. We are seeing a degree of upward momentum inside US liquidity, but it's not market supportive at the current time. The thing to remember, this particular chart is on a daily basis, so we're starting to see a minor increase in US liquidity. Members of the service, you know exactly what this means. And if you're not sure, this month's video will tell you. Long-term members of the global CTKS family know that when it comes to looking at Bitcoin, we also need to look at total, especially on the structural levels of total crypto market cap. At the current time, we can see structurally that we don't have overpinning structure. We've just got up over a level of structural resistance, and that's looking pretty good. we have structure up at this $2.52 trillion mark. So for example, if overhead structure was on total crypto market cap at this point, we may say that Bitcoin has the potential to come down, but Bitcoin has the potential to rally up until the entire crypto market finds structural resistance. This is all part of the timing methodology that we put scientific bookends on. We make sure that we're looking through all the charts, assessing how things are strengthening or weakening. A lot of people in the crypto space were saying that Bitcoin decoupled from the stock market, and we were saying Bitcoin cannot escape the stock market's gravity. Now, what actually occurred? I think it's pretty obvious. Bitcoin literally cannot escape the stock market's gravity. That is what's happening. And why are we getting a bounce here? Well, the US markets are horrendously oversold at current times. We're getting a bounce. Will the bounce continue? The only way to answer that question is to stack probabilities through the row 1, row 2 especially. These are really, really important. Keep your eyes on the futures of the S&P 500, the NASDAQ, the Dow, and also the Russell. And Bitcoin and total crypto market cap, because they can't escape the stock market's gravity, they're very good risk-on and risk-off indicators to look at. Because they're highly risk sensitive, they just overextend any negative and any potential positive news, so please keep this in mind. My thoughts are fairly straightforward. We're under a wild degree of structure that is just pushing down on the crypto market, but also down on the stock market. Until we have some shift or change in the macroeconomic outlook, we are still under pressure. Yes, we can retrace because price is always moving in a wave, always up and down, up and down. What typically happens is people say, oh, one green candle, that just changes the whole outlook of the market. No, it doesn't. No, it doesn't at all. We just have to just bear in mind that stocks and crypto and commodities, all prices, are just moving in a wave between structural support and structural resistance. We could even get a push up to this structure up here around that 83,000. Now, if this happens, a lot of people will go wildly bullish, potentially at exactly the wrong time. But of course, we let the charts dictate our actions. We can already see that the S&P 500 has just plummeted down. Getting these upward ticks is absolutely normal. But it doesn't mean a trend change. It means that you must master fear. Please make sure that you look at yesterday's video. Yesterday's video is something really, really good to keep in your mind continuously. And if you haven't looked at the service video put out this month is perhaps the most important service video I have ever done. It will equip you to take control of this price action. It's vitally important to keep your mind very, very positive in market conditions like this. Going through the CTKS Creed is a really good idea. These are positive affirmations for you. If you know the universe is designed to make you succeed, every day you can show kindness, integrity, and gratitude, because you know opportunities in life reset daily. You are worthy of all the best things in life, but you have to work for them as well. They won't come to you on the couch watching Netflix. Just start small and scale with buy on red, sell on green, but please make sure you know what you're doing. Life pullbacks will give you the strength for the next life rally because you're dedicated and committed. You're either winning or learning and never blaming. Never blame just simply means you don't disempower yourself. You either win or you learn. If you don't win, you've learned something very, very valuable. And the market is always right there to give you tuition fees. But make sure that you learn the lesson, because when you do, everything changes. And always solve your problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And please make sure that you rewatch yesterday's video. It's very, very important for your mindset. Bye for now.